Yeah, this week tip is don't fret about your Calgary City assessment for 2025. And we want to tell you why. Tim, we've been hearing this for a month now.
Yep.
Okay, we know, and Tim's going to explain something. We know, Tim, that they jacked the tax rate on us. And then what else is going on with the tax rate?
The tax rate goes up 5% or 6%. Your tax assessment or property value went up 15%. So add those two together, you're at a 20% increase in your taxes for this year. That's your property taxes. Now, we're telling people not to fret about it.
Yeah.
Why is that?
Okay, so we want to give you the rundown with this because we're actually excited about these assessments. Now, there are people out there that, you know what, if times are tough and you know what, you're living in your property and you're not planning to invest, you know what, fair enough. You can, you know, fight that and get it lowered and then hopefully you pay less. But if you're an investor, don't do that at all. And the reason being, the first reason is that the majority of banks out there will go off the city assessment as your appraised value. So this is a huge, huge bonus to people either living in their rentals or, Tim, they may have rental properties, living in their own property, or that they have they're living in their own properties, because you can now use that appraised value as a benchmark, not only as a benchmark, as the value that that property has today.
Yep.
But you can use that amount to refinance your equity out of those properties. And Tim, we've bought most of our properties rolling that money from property to property. So the city has given you a gift now with this evaluation where you don't have to get a higher appraisal because you've already got a really high appraisal. I mean, my city assessment went up $300,000. That is huge if you can access those funds because it's tax-free money and you can refinance that money out and then use that to go buy more properties.
Yeah, and what we anticipate seeing is, due to the economic uncertainty of 2025 with potential trade tariffs coming in, we think that a lot of people are going to go out and get a HELOC on their house, and they'll have that as an emergency fund source so that they can weather any economic storm that comes up with this weirdness or from this weirdness between us and the United States. So don't necessarily look at it as a bad thing when your assessment goes up. Turn it around and look at it as a good thing. You'll be able to access more funds. On your principal residence, if it goes up, it's tax-free money when you sell. So if your property value goes up, $100,000 a year on your principal residence, that's a great thing because you're adding $100,000 to your equity every year.
Yeah. And what Tim's explaining there is that if you choose to move out of your principal residence and you've got this high appraised value, the day you move out, you can use this year's city assessment to prove that that's what the property is worth. So if the value actually isn't there, which is some cases we're seeing huge assessments, if the value actually isn't there, nobody can fight that because that's what the banks have gone off for many, many years. So that price gets locked in. And if you move out, some people, Tim, are in our move up program where they buy property, move into it, then they move out of it, rent it out. Well, then you're capped at that city assessment for this year, meaning that you will not pay tax on anything below that dollar amount, saving you thousands of dollars. So that city assessment can go a long way. Don't be too upset with it. If you're an investor, actually be happy. And if it's your first crew tip of the week, subscribe to our channel. There's so many tips on there, Tim, that you can learn from and actually be confident with your real estate investing and move you forward.
Yeah, so that's the tip of the week.